Do you know how the average temperature is determined? Well, my son played Little League Baseball with a number of years ago with a TV weatherman, and he shared with me that they take the high for the last 10 years and average it, and then the low for the last 10 years for that day and average it as well, and that's the average high-low, and they say, hey, it's either hotter than normal or colder than normal. It's a moving average. Well, I'm not here to talk to you about the weather. I'm here to talk to you about the weather. A beautiful thing, English language. Words that sound the same, spell different, mean different. I'm talking about whether something is hot or cold. Not as in temperature, but as in popularity. Right? Whether something moves up or something moves down. Right? And if the stock market is that prices are high, man, we say it's boiling. We say it's a hot market. And when it's down in the dumps, oh, it's frigid, or treats you frigid. Again, we're not talking the weather like it's outside, but we're talking about whether a stock will move up or down. We're here to trade options on stocks, not options on actual thermometers. Let's quickly define stock. One place to look would be Investopedia. They tell that a holder of a stock, a shareholder, has a claim to a part of the corporation's assets and earnings. In other words, a shareholder is an owner of a company. We're going to look at stocks where there is no ownership, there is no assets. We're going to look at stocks that measure. And since they measure, just like a thermometer measures, I like to call them weather stocks. Now, these are instruments priced by two models. One is the change of an underlying issue, and the other is the marketplace, supply and demand. Now, technically speaking, they're not stocks. They're exchange-traded funds, also known as ETFs. And countless ETFs exist, but we don't care about the ones that just measure. We care about the ones that you can trade, and specifically those that have options, and more specifically still, those that have liquid options. On this presentation, we're going to talk about 6. FAS and FAZ, TZA, VXX, SDS, and SSO. And I'm not really going to talk much about SDS or SSO. We're going to focus on the top 4. Now, FAS and FAZ, these are bear and bull banking thermometers. Here's a list of some banking stocks: Bank of America, Citigroup, JP Morgan, US Bank, Wells Fargo, and there's many more. It's my premise that banks have problems. And if it's not for the government put, well, this is a term meaning the government's there to make sure that banks don't fail. Without these problems, a lot of these banks would fail. They made lots of bad loans. They've done all sorts of problems. I'm not a big fan of banks. But having said that, you can trade bank stocks, and more specifically, options on bank stocks, to great success following our system. Now, the government put this is to protect the market from a decline for the sake of the economy. I believe it creates a bigger problem for later. Bank stocks that were too big to fail are now too bigger to fail. And we have a lot of banking flops. In 2007, there were 3 banks that failed. In 2008, 25. 2009, 140. 2010, 157. And 2011 is still going on, but I think it's on pace to be a record for these years. I personally have had a number of banks fail. I like to think that the value of banks is a window to the soul and outlook of the recession and the economy. If bank stocks are doing bad, we're not going to recover. And if bank stocks are doing pretty well, we can recover. Because let's face it, this recession, the Great Recession, is based on poor lending practices from banks. Now, we're going to specifically use 2 stocks to measure banks. FAS and FAZ. F is financial. A and S and A and Z, they're just to differentiate. Both of these stocks are 3X. FAS is a 3X bull and FAZ is a 3X bear. Basically, they take the change in the underlying bank index from a day to day and multiply that 3 times. Investing in these is a bad deal. You're not trying to get a long-term growth or a long-term failure by trading these instruments. You're looking for the change from day to day. Let me show you why I say it's a bad deal. You got to be a little bit good at math here, but there's no true tough concepts. So assuming we have X as a value, let's just call X $100. If the banking index is at 100 and it increases 20%, it would now go to 120. Well, if it decreased 20% from 120, it'd be down to 96. Or if it starts at 100, we'll call X 100, and it goes down 20%, it would go from 100 to 80. And if it went back up 20%, it would go up to 96. So a 20% move one day followed by a 20% move the opposite direction the other day doesn't get you back to where you start. And it only gets worse if the numbers are bigger. If you lose half your value from 100 to 50, but you gain half back, you go from 50 to 75. This bad math will show up in an inverse chart. Here we have SDS and SSO. These are inverse to each other. When one goes up, the other goes down, and vice versa. Now, if you look at quickly, it just looks like it's a mountain and the reflection of a mountain in a pond or lake. You might say, when one goes up, the other goes down. I see the structure. But if you look closely, the scale is slightly different. These are day trader stocks. And a friend of mine traded with Wachovia Bank in his IRA, trying to get leverage because you can't normally get leverage in your IRA. Now, there are brokerage firms that will let you trade options in your IRA, but not Wells and Wachovia. And not only did they not want you to trade options, they didn't want you to own these day trading stocks, certainly not for the long term because of the bad math behind it. I feel really sorry for my friend because he wanted a multiplier bull gold stock. He was very confident that gold was going up, and we had this conversation when gold was under $800 an ounce, and gold had since doubled from there, and if he could have gotten that 2 or 3x times, he felt he would have made a ton of money. Again, 3x and 2x bull and bear stocks are generally meant for day trading, not investing.